2 weeks ago, I was on my way to Dallas. I had a call from this lady. She said she wanted to have a meeting with me. She and her husband have been having an argument about buying a home now in the US. That was the wife's position. The husband's position was they should work for 3 years, save some money, go back to Cameroon and construct a house in Cameroon. When I came back to Dallas, I went to the house, we sat down on the dinner table, and we had a conversation. Our topic today for our video is about what I'd shared with this humble couple. How owning a home in USA can fetch you a fortune in Africa. Thank you to all who have subscribed to our channel. C2C Mentors is a real estate mentorship community, and all we do here, we talk about real estate because we understand it is at the foundation of your family's finances. When I went to their home, the first thing I asked them, how much do you pay now in rent? The husband said they pay $1,500 a month. And I asked them, how long have you stayed in this house? They said 5 years. So if you take 1,500 times 12 months, then in 1 year, they pay $18,000 in rent. In 5 years, they have paid $90,000 in rent. And then I asked them, how about your income situation? The wife told me she just graduated from school as an RN, and the husband also just graduated as an IT professional. Husband has a job, very well paying job. Wife has a very good job. So their combined income now is about $150,000. So I asked them, what was your income before? It was about $75,000 for both of them. They are now making about twice the amount they made when they were struggling. Very good thing. But then the argument here was what? Buy a home now in the US or work and save money for 3-4 years and build a home in Cameroon. With their new jobs also comes a new tax reality. If you look at $75,000 a year, their tax bracket is at 12%. At $150,000 a year for a married filing joint couple, that tax bracket is at 23%. So this is the new tax reality. On my last video, I talked about getting the MEMO. This is part of getting the MEMO on the free enterprise system. At this income, you have to look for safeguards. I talked about tax havens. How to minimize your taxable income legally without causing any trouble. Because if you don't do that, then you are hit with this 23% tax. And your idea of $150,000 income becomes an illusion. But I told the couple, both of them are correct. Buying a home here now is good. Constructing a home in Cameroon in 3-4 years is also a good thing. But let's put some reasoning in between. Let's say, for example, you buy a house now and your monthly payment, what we call your mortgage, is about $1,800 a month. In 1 year, in 12 months, you must have paid $21,600. If you want to save money, 3-4 years, and you want to build in Cameroon, that will take you about 5 years. Remember in our previous example I gave, they had paid in $1,500 a month. For 5 years, $90,000 that has gone off through the window. The home here in the US, let's put it now in perspective. So in 5 years, they must have saved $110,000 in equity. When you buy a home in the United States, when you make a payment, say that $1,800 a month, about 70% of that amount, it goes to pay for your interest for that loan. At the end of the year, the mortgage company will send you an interest statement. So in our case here, if they were to buy a home where they make a monthly payment of $1,800, the interest is 70% of this amount. At the end of the year, the mortgage company will send them an interest statement. That interest statement will be how much they have paid in interest for 12 months. And that amount will be $15,120. This $15,120 is tax deductible. The property taxes you pay for owning your home is 100% deductible. The husband told me that he does IT training. He does it on site. So I also tell them there is what we call the business use of home credit. So they can deduct part of their home. They can deduct the utilities, the mortgage, deduct the upkeep of that home. They can deduct it as a business use of home credit. Each time you are buying a home and you're putting down less than 20% of the value of the loan, the lender imposes what we call a private mortgage insurance on that loan. A private mortgage insurance can range anywhere from $100 to $1,000 depending on the size of your loan. The amount you pay for private mortgage insurance for any home that is built after 2006 is also deductible. Home appreciation is just the value that you gain for your home over the years. That is why it is very important when you are buying a home, let your real estate agent do a predictive 5 to 10 years value for you to get an idea of how much that house will appreciate in the next 5 to 10 years. They can also do a retroactive predictive value to see how much homes in that area have appreciated for the past 5 years. That will give you an idea. Because a home is not just a place for you to live in, a home is an investment, and you should be able to use data to measure the return on that investment. And one of the key factors is for you to have a predictive value of your home over time. Equity is the simple value in terms of money that you build in your home. And if we come back to our example here, over 5 years, they must have saved $108,000. We are not talking about all the tax benefits that they've been getting all these 5 years, because these tax benefits now, they will not provide that legal umbrella for them to be able to do what? To minimize their taxable income. Because the US tax code, tax evasion is illegal, but tax avoidance is legal so long as you stay within the legal beltway of the tax code. This is about getting the memo. This is about understanding how the free market enterprise system will work in favor of you. John Hope Bryan calls it one of the 5 rules of financial engagement. After 5 years, you can go to your bank or your mortgage company and tell them, I need to take a home equity loan. This home equity loan will now be based on this collateral, which is the equity that you have in your property. So I asked the husband, I said, if you take a home equity loan of $108,000, would that be able to buy you a home in Africa? He said, oh yeah, that can buy me not just a home in Africa. I can buy a home and I can start a business and I can do a lot with that money. Your home in the United States, it's still there. You are still enjoying the tax benefits. The house is still appreciating, but your home in the United States can give you a fortune in Africa. I don't care what part of Africa you come from. If you have 100,000 in your hand cash, no matter where you go to in Africa, you're going to buy you a very huge mansion. I don't know about other countries, but let me talk about Cameroon. So many stories, even my own family, how we work here day and night, 16 hours, day in, day out, sending money to Africa to build a home. How many times do we go and we realize that there was no home? How many times do we go and we realize that the so-called home, dream home, mansion we're thinking we're building, you go there and you see something else? Even when you succeed to build that home, how many times do you live in that home? You see, if you are like me, when I came to the United States, I said 5 years was the maximum, and I'm back. Because we all have this nostalgic feeling of homesickness. You know, we want to go back and make things happen. It's 20 years, I'm still here. Why will I see an opportunity to build an empire in a $16 trillion economy? The free market enterprise system, the best in the world, that even Europeans are running to come here. And I will leave it and say, I want to, first of all, go build a home in Africa. Don't get me wrong, building a home in Africa is very good. It's a very good thing. But what I'm saying is, your home in the US will provide you the foundation, will provide you the nest egg that you can leverage yourself both here and back in the continent. In 5 years, I don't care how much you make, in 5 years, you will not be able to save $108,000 in the system. Because the more you make, the more you see things that you didn't see them before. That is the system. When you build that mansion back home, and you say, okay, you want to put it for rent. How many people actually get money for rent coming from them from Africa to the United States? Family members, first of all, will claim ownership of that property, even when you're alive. So are you telling me nobody prays that anything bad should happen to any of us? But those things, they are real. We should think about them. So what happens if I die today? Will my wife and my family be able to go take that home back home? Also think. I've seen situations where people actually abandon homes that they built back home just because they were building it with a different agenda. But once the house is there, everything changes. In my country, Cameroon, it's more difficult to have a land certificate than to build a home. But if I have 100,000 in my pocket and I'm going back home, I will stand in the tallest streets, in the tallest building, and I say, I want this building. Cash is king, and you buy it. And you can remodel it and do whatever you want to do with it. I told this couple, they were all right, but let's put some facts in between and see what is going to work. Build your nest egg here. Make your family here comfortable. Over time, you use the system, you build wealth. And when you have that money, you can take it now. Because guess what? Even if he takes this 100,000 and go back home and he gets a wrong investment, it's okay. He still has what? He still has the home here which will provide him his foundation. That's what we say. Owning a home in America is part of getting the memo. Owning a home is part of understanding how to make the system work for you. Owning a home is part of that legal shield, that umbrella that would provide you with the tools for you to be able to minimize your taxable income. And I was happy after the conversation. The husband said, honey, let's buy a home. I did not want to say yes or no. No, I wanted to bring facts on the table. So thank you again if you have subscribed to our channel. C2C Mentors is a real estate mentorship community. All we do here is talk real estate because it's at the foundation of your family's finances. Thank you. See you on our next video.